Hey everyone, welcome back to Web3 Daily. Today's market feels weird. It's quiet on the surface, but if you zoom in just a bit, you'll start to see something's not quite right. Let's start with the big dogs. Bitcoin first. It's been hanging around the highs for days now, just drifting sideways. No real momentum, like it's waiting for something to break. For the past week, BTC has basically been stuck in the range, just teasing both bulls and bears. And then finally, in the last 24 hours, it gave way a little, dropped about 3%, landing around 113. Is it a big move? Not really, but it's the way it moved that matters. It wasn't a flash crash. It was that slow leak you get when the smart money starts rotating out, quietly. The kind of movement that doesn't scream panic, but whispers heads up. ETF inflows slowed down. Spot volume shrank. Liquidity is getting thinner. And when that happens, volatility starts lurking just around the corner. Everyone's watching, no one's acting. It's tension, not action, that defines the chart right now. Now, Ethereum. Ethereum got slapped harder. It fell over 5% in a single day. That's not nothing. It dropped below the 4.1 mark. And the craziest part? This wasn't triggered by some random protocol bug or token unlock. It was sentiment plain and simple. The hype around Ethereum ETFs, the hopes, the dreams, that narrative is flipping. People who bought in for that story are now heading for the exit. We'll get into that ETF math in a second. But let me say this first. This market is full-on wait-and-see mode. Jackson Hole is coming. You can almost feel the anxiety across both TradFi and crypto. It's like a poker table where all the players are holding their breath, just waiting for Powell to speak. Nobody wants to be early. Nobody wants to be wrong. So the smart move right now, honestly, doing nothing might be the best strategy you've got. Now, here's the part that really caught my eye. Not the charts, not the red candles. It's the fundamentals. I looked at the TVL, total value, locked on a few major chains. ETH, Solana, even BNB chain, all down. Not by a ton, but just enough to raise eyebrows. At the same time, stablecoin supply is contracting. More people are redeeming than minting. Liquidity is leaving the system, and the ETH staking exit queues spiking. People aren't just taking profits, they're actively reducing risk, unwinding positions, prepping for potential downside. This tells me one thing: the market's appetite for risk is shrinking. When TVL sleeps, when stablecoins get pulled out, when staking positions get closed, it's not because traders are bearish, it's because they're cautious. Everyone's on edge. Nobody wants to be overexposed ahead of Jackson Hole. And if the Fed comes in hot, boom, that caution will look smart real fast. So what's the takeaway here? I think there are two kinds of players who make it through markets like this. One, people who are already positioned well, who know their exposure, and can ride through noise without flinching. Two, people who are patient as hell, who wait, who don't jump at shadows, who let everyone else blow their money during chop and then strike when the trend is real. If you're not in either of those two groups right now, you're in danger. Because this market isn't giving out free wins. It's punishing every mistake, every overtrade, every over-leveraged bet. You try to catch a short-term move here, and odds are you're gonna get chopped to death in the range. Alright, now let's talk about the real headline. Ethereum's ETF flows. 2 days ago, ETH ETFs experienced a massive net outflow, almost 200 million, in 1 day. That's the second biggest daily outflow since these products launched. And in a market that's been searching for bullish narratives to hold on to, that number hit like a gut punch. And here's the kicker, it wasn't retail panic. I went through the flow data, and this wasn't moms and dads yanking their Robinhood accounts. This was structured. This was institutional. We're talking big blocks of money being pulled in phases with timing. It looked like risk rebalancing, not panic. Strategy. So again, the question is, why now? There's no single answer. But I've got a theory. A few things are colliding right now. First, the Fed is sounding more hawkish. Real rates are sticky. Inflation prints are coming in hot. You combine that with Jackson Hole looming over everyone's head, and what do you get? Caution. Second, the ETH narrative got ahead of itself. People priced in way too much ETF. Optimism, way too fast. And when the approvals came, they were like, oh, that's it? And lastly, on-chain signals started flashing red. Staking exits rising. Gas usage slowing. Whale activity turning defensive. It's a whole mood shift. Now here's where it gets interesting. Some of the biggest funds doing ETH perp spot arbitrage started pulling back too. These guys don't care about stories. They care about spreads, volatility, funding rates. So when they back off, that means edge is drying up. And when edge disappears, so does smart money. So when I saw those flows leaving ETH, I didn't panic, I didn't sell, but I also didn't dismiss it. I took it as a weather report, a warning. Markets don't break on outflows, they break on unpreparedness. What happens next? That depends. If ETH ETF inflows return next week, maybe this was just a flush. But if we see continued net outflows, if staking exits keep climbing, and if TVL keeps bleeding out, then we are entering something much deeper, a recalibration. So if you're trading right now, my suggestion is this: trade small, use lower size, lower expectations, and turn up your awareness. Watch the big stuff: ETH, ETF flows, TVL shifts, stablecoin supply changes. Don't get distracted by pump coins or narrative bait. Real information is hiding in macro liquidity and institutional movement, and sometimes doing nothing is the sharpest trade on the board.